Hey, what's up, Dreammakers? Welcome back to the show where we're talking about what's real, what's hype, and what you should actually be paying attention to out there in the world of real estate and mortgage news. It's Today in Mortgage. I got Rich Jefferson here with me to talk about some stuff that's going on in the world today. Rich, how are you doing?
Good morning, Michael. I'm doing good.
Yeah, so we're talking today about the things that we heard over the weekend coming out of Israel and Gaza and from the Hamas, what they're calling the Israel-Hamas war. Obviously, it's a terrible situation, and we won't get into the details of the conflict, but we're here to talk about just what to expect and how that might affect what we're seeing on our side with rates, with mortgages, with the economy. And obviously, that's not the most important thing that's happening right now, but it is something that we are talking about here on the show. And it will affect what we talk about on future episodes. So we're going to discuss it here today, and we're going to try to be sensitive to the topic. But we are going to pull some information from an article that was from CNBC this morning. It says, Treasury yields fall as investors seek safe havens amid Israel-Hamas conflict. Rich, what have we seen? Obviously, the markets were semi-closed yesterday, but what have we seen today as those reopened?
Well, we're seeing, 10-year yields drop. We're 14 basis points right now. We're seeing the stock market kind of reacting okay to it. There's just still some unexpected. Generally, there's a big knee-jerk reaction. Oil gets traded up crazy amounts because they think there's going to be a limitation in production because of the war out there and just the logistics of getting crude oil out of those countries.
Yeah.
So
Yeah, and it says it a little bit in this headline, but tell us why, investors would kind of retreat back into the Treasury bonds in situations like this.
safe harbor. We don't know what how the stock market's going to react. Uh, you know, there's just a lot of unknown, and when there's a lot of unknown and uncertainty, people are going to take their money and invest in something safe, and that's where treasuries, bonds, like those are safe harbors.
And Rich, have we seen kind of an immediate reaction in mortgage rates?
They got a little bit better this morning, and we're kind of starting to lose the improvement throughout the day. I think we're maybe 31 basis points improved today, and we were as much as 50 basis points just 2 hours ago. So we're kind of losing the improvement that we had, but it's still better.
Some of the stock market was open yesterday. We saw markets in treasuries today, but the kind of indexes in the market have stayed positive, so might be reducing the effect that we thought we might see in mortgage rates. So we have a recent example. Talk a little bit, if you can reach your mind back to this crazy year that we've had back 18 months to invasion of Ukraine and what happened in our industry right after that.
Well, rates
Mhm.
continue to climb, right? I
Right.
mean, we're considerably higher than we were when the war broke out back then, but that was also when the feds were, bumping the Fed funds rate and talking about just calming inflation. And they've been a pretty hawkish around this. So they drove the Fed funds rate. I mean, we're 5.25 now. Now analysts are predicting a 60% chance of no rate bump in December.
Sure. And we, like you said, we saw some of that rate increase that was happening at the time. It was going to be happening anyways, but the Russian invasion of Ukraine only exacerbated the oil problem, which made prices go up, which made goods prices go up across the board because transportation costs, et cetera, just made that inflation that much worse. And then the Fed had to react even stronger to tamp that down. And so maybe we're not going to see that this time because we've already, been fighting inflation for a while. But, that jobs report we had on Friday and all the other things, like there's so many things and so many factors out there. And we're only talking about it here today because all of these things are things that consumers and customers will be talking about out there. And it's good to know, if someone brings it up, at least how to discuss it with them. But Rich, the same thing, the drum we beat all the time is what are we telling customers right now with just the market, inventory, and rates? What's the most important thing to remember?
If you qualify on today's rate, move forward.
Yeah.
That's it. Like you can't time it. The only thing that you can time for sure is prices are going to go up when rates go down. That's it. The prices are going to go up on homes when rates go down. So if you can qualify, get it in now. And if rates go down, you can refinance. We're talking about this today, Michael, because it's fresh. It's hot off the press. It's happening new right now. And normally in my past 28 years in this industry, a geopolitical, event around the world like this would normally cause interest rates to fall. Normally, because of the uncertainty and the rush to safe harbor, to make investments into bonds and treasuries and that kind of stuff. That's a safe place to put the money, which brings the rates down. But we're just in a weird place coming out of the pandemic, and we've got the Fed doing what they're doing to try to control inflation. So there's just so many plates spinning that we're not seeing normal outcomes that we have experienced in the past. So, the coming days will definitely tell. I mean, hopefully we start to see a bit of improvement out of this. I hate to say, hope we get something good out of this, but none of this is good, right? Another war. This is bad news. But I don't see rates moving a lot. We're just not seeing it right now.
Yeah, there's a lot to consider here and a lot of pain and suffering that's happening out there right now. So this is definitely not the most important subject, but it is something that we're covering here today, and something that you need to be able to speak about in the marketplace. So anyways, we'll leave it there for today. Like we said, thoughts and prayers go out to all the people who are affected by this. So Rich, thanks so much for being on today. Thank you everyone out there for watching and listening. We really appreciate you, and we'll see you next time on Today in Mortgages. Today in Mortgages is produced by Network Funding LP, which is an equal housing lender, NMLS 2297. The content of this program is meant to be a commentary on mortgage and real estate news, and any discussion of rates and or products should not be taken as an individual mortgage or home buying advice or pricing estimates. And any commentary on this show should not be considered a promise to make a loan. All applicants for a loan must qualify, and you should consult a professional regarding your individual loan scenarios for your financial situation. Visit our website at nflp.com/licenses for all state licensing and other legal information.